Welcome, everyone. We'll get started in just a moment. We have some exciting trends to show you on enrollment growth. Nice to see you. Welcome. Okay, let's get started. Thank you all for coming, and welcome to the Gray Decision Intelligence Demand Trend webinar, designed specifically for community college professionals. This is not your average webinar. It's an opportunity to gain insights into labor market data for program evaluation and use data to debunk common myths about community college programs. A few housekeeping items to get started with, please. At the bottom of your Zoom screen, there is a place labeled Q&A. Please feel free to add your questions there. We'll get to as many as we can during this session, and we'll follow up later with you if we run out of time. My Gray colleagues and I will be available for chat for the duration of the session. You will receive a link to the webinar recording and the presentation slides in the next few days. Please look for it in your email. And now, without further ado, I'd like to introduce Bob Atkins, not only the founder of Gray Decision Intelligence, but also a program evaluation expert and a best-selling higher ed author.
And someone who has great fun wading through all this data for you each month to try and figure out what's going on. Thank you very much, Marianne. I'm Bob Atkins, and what I'd like to do is begin to share with you some data for October 30th. This is the data for the month of September and what happened in higher ed for student demand, employment, and those are really the two big things. So let's do that. First, I'll talk you a little bit through what is a program evaluation system so you understand where all this data comes from. Then we'll talk about student demand. We'll shift over to employment. This month, we have a special section on benchmarking, sharing with you findings from our benchmarking database. It now includes over 50 institutions and has revenue, cost, and margin for benchmarks for colleges all the way down to the course, subject, and level. So 100 level English, what should that cost is now part of our benchmarking database. And then I'll provide a quick summary. So what is a program evaluation system, or as we call it, a PES? We believe it's one of the few things that you can do with a college or use in order to both increase revenue and reduce cost. Let me walk you through how that happens. First thing, we're not all here to solve financial problems. Your mission is critical, and that is keeping that in mind is part of a robust program evaluation system. Second, you've got to keep track of academic performance, whether that's number of credit hours completed, number of students who pass the NCLEX exam, or DFW rates in your courses and graduation rates from your programs. We also think it's important to understand markets for your programs when you're trying. In particular, this is where you find opportunities to grow in markets that are healthy, where student demand is high, jobs are plentiful, and competition is manageable. Those are your growth opportunities, whether that's for new programs or for an existing program that still has room to grow because it's in a healthy market. Those markets in turn drive your margins. What students want to take drives revenue, and that's really the primary determinant of margin in a program. Now, why do you care about margin? It's actually not so that you can make money and go to the bank and pay dividends to shareholders. You're not for-profit institutions. You need margin in order to fund your mission. And importantly, high margin programs need to be present so you can subsidize low margin programs that are critical to your mission. And those cross subsidies are perfectly appropriate in higher ed as long as we're subsidizing things that are appropriate for your mission. Now, in order to make decisions, you've actually got to engage the right folks. You've got to give them the right information, and you've got to create an environment in which they can evaluate programs, a good process, if you will, for making decisions. And part of that is having the right information, but another part is having the right people in the room and facilitating a dialogue where they can use that information in order to arrive at programmatic decisions. So a good program evaluation system is much more than software. It's more than just data. It is the offering of the right data to the right people in a structured format where they can make decisions effectively. And then there's this little thing that happens after you evaluate programs. You got to manage them on an ongoing basis. And in our experience, this is probably the biggest missing ingredient in program evaluation and management. It's that manage part. Because we really tend to let management go until we get towards the end of an accreditation period. And then we pull in and say, oh my gosh, what have we been doing? And are we on track for accreditation? But that ongoing day-to-day or month-to-month management of a program is often left to departments, but a program is much more than the sum of a bunch of departmental courses. And so keeping an eye on it and having stakeholders who pay attention to it and manage it over time is really important. In particular, a good program manager is going to be able to see, for example, whether enrollment in a program is increasing or decreasing, and therefore whether sections associated with that program may need to increase or decrease in size. So it's Halloween, so surprise. Now let's go on and take a look. Oh, I'm sorry. Let me go back a step. There is a new surprise entrant in the management of programs, and that is AI. And AI allows you to more effectively plan and communicate. It can do some of those things for you. It can articulate the summary of a program. It can actually create summaries of numbers and create text reports out of those numbers, which is really just emerging as a capability. One of those things we built recently, and we can now provide a text report from a stack of numbers that frankly may be daunting for an individual to look at and understand. So the text is a huge help to them. It can predict. So you can take data about a program, run it through machine learning models, and infer how big that program might be at your campus, whether that's a new program you haven't launched yet or an existing program. And there, really what you're looking for is whether that program's lived up to its predicted potential. Again, that would be a way of finding a program that has room to grow. And we've developed the ability to predict program size now for institutions so that when you're going into that new program development process, you come in with a reasonably sound understanding of how big that program is likely to be. And finally, it can report on your programs and it can trigger alerts. And I think that's a fundamental difference from the way we manage most things now. We're going to be able to anticipate a problem. We're going to be able to send you an alert so that you understand that something's gone off, whether that's gotten way too good and now we don't have enough instructors, or there's some problem in a more negative way, it's shrinking, or there's a student performance problem. Either way, we need to be aware so we can resource the problem correctly. And that ability to find those things before they've gone way off track is really important. And another capability I think AI will bring to bear. So when we're inside the market data, that's what we're going to talk about today. There are 4 dimensions to it: student demand, employment, competition, and degree fit. And under degree fit, we put cost, and that's where I'm going to talk about the benchmarking part today. So on the student demand side, we've got several sources of data. We're not going to share iPads today because it hasn't changed, because it only updates once a year. And we did that. We covered the major changes in iPads in our last session. We got the brand new 2023 iPads data. Enrollment does update regularly, 3 times a year, and we'll share that information with you. And what updates most frequently is Google, where we update our data once a month with Google search volumes by academic program. So think of this as past to future. Past is what happened in iPads. That's what people wanted 3 to 5 years ago. That is 2 years before the most recent data came out in 2023. Enrollment, right up to date. Google is what people are looking at, and they'll probably come take those programs in the future. So let's start with the future and what Google is telling us about the prospects for higher ed. And it is really fun to look at these charts and see those light blue bars going up. Those bars, let me go back a second here. That's 2024, and the dark blue chart is 2023, and then that gray chart is 2022. And we're finally seeing an upward trend in 2024, higher than last year for the last, really the whole of this year. I don't recall the last time I was able to say that about this data, and I'm presenting it for years. So very promising look. And now we're going to go through in a moment, and we'll touch on what's going on with enrollment. And that may or may not be tracking with Google search volume. So this year, we're actually up 56% year over year in Google searches for academic programs. So again, makes me pretty optimistic about what's coming down the pipe. Cost per click, not going up much. We're up 1% here, essentially flat month over month and year over year. So that's very good news. Oftentimes when we see those increases in enrollment, we'll also see a spike in competition, and that drives up Google search volumes. Not the case right now. And here's how much the top programs have increased. So what we're seeing here is not total search, but the increase in search volumes for each of these programs. So searches for business administration and management went up by almost 500,000 searches. So I went into our data to try and figure out how many searches there are per student enrolled. And that translates to about 800, 900 incremental students enrolled in college. Medical billing and coding, that's about 1,000 incremental students. So these are, be careful. A search is not a program. It takes a lot of searches to generate, a search is not a student. It takes a lot of searches to generate one incremental student. Here we can also see that business has 3 slots in the top. I mentioned business administration and management, HR, and accounting. What I have been surprised by is when health doesn't dominate these things. It used to, but now it's medical billing and coding, nursing assistant, diagnostic, ultrasound, and dental. Oh, actually, I take it back here. Health does dominate this. EMT, 5 of our top 10 are healthcare related programs. Then we have a couple of others, education in particular, and as one of our other programs. Now, as we continue through this, now we're going to turn to enrollment. And what I want to do is run a survey and see what you all think is happening to enrollment right now in higher ed. Or specifically, how much did enrollment grow or decline for associates programs in the academic year 23-24. Let me give you a second to go ahead and post your guess. All right. Marianne, you want to share our results? See what people thought? So we got some folks who think it's shrinking. Some folks who think it's going up a little bit. And a fair number who thinks it's up 2 to 4%. And then we have some serious optimists thinking it's up 4 to 6%. So let's see what actually happened. I must say the wisdom of the crowd here is pretty good. Our associate enrollment this year, 23-24, is actually up 3% so far. So nice uptick. You can imagine what it was like presenting this year after year when there are these huge downturns. But that's really turned around now, and we're starting to see for the last 2 years 3 to 4% growth in enrollment for associates programs. Certificates are up even more, up 5%, and generally up in that 3 to 5%, well, 3 to 8% range over the last several years. So nice, robust growth in certificates as well. What's growing? Here, I'm sorry for the confusion earlier, is where we see CTE leading the list, career and technical education. And CTE programs include welding tech and auto mechanic. They're leading our growth. Health information records tech, auto body collision, and cosmetology. And each of these is up more than 1,000 students enrolled. So very substantial numbers. Then we have some infotech things. And I don't mean what is strictly called infotech as a program, but anything associated with information technology. And one of those programs is infotech itself, but cybersecurity is also up over 1,500 students, and computer and information science is close to 900 incremental students enrolled. And then we have business, a bit of laggard in this metric, up around 700 for both business administration and management and small business administration itself. So the leaders in new enrollment are not the same as our Google leaders. That may shift over time as those students enroll in school. But for now, this is led by CTE, information technology, and business. So as we look at associate programs, the picture changes quite a bit. And health-related programs now come to the top 4 of our top 10 are health-related programs, health services, allied health general, with over 5,000 new students enrolled, psychology with almost 3,000, diagnostic medical sonography with over 2,000, and kinesiology and exercise science up 1,200. We do have a couple of tech programs. One is the largest single growth in enrollment of all programs at the associate level, and that is cybersecurity, up nearly 7,000 students enrolled in over this per year over this 5-year period. Very impressive growth. Computer science also growing close to 4,000 students per year. So these are very substantial numbers if you think about it. Over the last 5 years, this means this program has gone up by over 30,000 students. Computer science up close to 20,000 students. Allied health up over 25,000 students. So these are very substantial growth numbers for each of these programs. And if you're wondering what I'm doing is this math in my head, what I'm doing is multiplying the average annual growth by 5, the 5-year, to get to the 5-year total growth. And that's when you start to understand how substantial these programs are. And why does that matter, actually? The reason is that in our experience, most of the growth in higher ed takes place in a few dozen programs. So there are 1,500 programs, academic programs out there, and you're going to see 50 to 60% of the growth in approximately a dozen of those programs. So if you're not in these very fast growing programs, you're probably declining because the only way to grow is to be in the ones that are growing and growing substantially, because there are a number that are declining. We don't report on decliners every month, so I won't share that with you, but there are a number of programs that are negative. In fact, most programs have been declining, though that may have recently turned around. Now let's take a look at what's going on in the employment world. And here we look at job postings, and it's been a positive trend for some time. Last 6 months or so, we were up with one exception back in March. This month, we're basically flat. And you can also see that this month's bar is considerably lower than the months before. The US labor market is slowing down from a very fast pace over the last several years. So this is not really a negative. We're still up 2%. It is a slowing, but it's a slowing in the context of a very healthy job market. Now, let's get to how people count jobs. And this is really important, although it seems like a very arcane thing that only somebody who did this kind of analytic would care about. So we're going to talk about here what we call crosswalks. That is the crossover from a program to a job. And in order to identify how many jobs are available for a given program, you have to have some understanding of which programs align with which jobs. And people have been doing this for decades. Unfortunately, they've been doing it with extremely simplistic crosswalks between programs and jobs. And typically those crosswalks, and this starts with the National Center for Education Statistics, are very narrow in what they think a person can do. So if I'm looking at psychology, they think a person can go into substance abuse counseling, and there are 60,000 jobs there, clinical counseling, school psychologist, not a whole lot of jobs there, psychology teachers, not a lot of jobs there, social science and industrial and organizational psychologists. And that's it. So for our thousands and thousands of psychology graduates, according to this theory of the world, there are only 5 occupations that they can get jobs in. Well, that's not quite correct. What we found when we looked at empirical data is that people with psychology degrees actually go into 759 different occupations. So we're not off by a little here. 5 is not close to 759. And unfortunately, much labor market data is done with a direct prep lens. And as a result, it dramatically understates the jobs available to students, misleads guidance counselors, and in many cases, negatively influences students' choice of major when it really needn't do that. So we look at what psychology managers do with their associate degree. They go into a wide range of fields, in particular management, general and operations managers, other project management, sales management, and a variety of other things. Retail sales, let's be realistic, not everybody here gets a great job. Many of them will end up standing on a sales floor. I hope that many of those progress up into management at some point. Then we have architectural and engineering managers, sales, I mentioned sales managers, sales reps. That can actually be quite lucrative depending on what kind of sales rep you are. Medical device salesmen, for example, make hundreds of thousands of dollars a year. Customer service reps, again, not a great place to end up in terms of potential comp, but we've got executive and admin assistants up here towards the top as well. And that's a good job, usually pays reasonably well. Of course, depends on what executive you're assisting and sort of how senior they are and how big their company is. But lots of different things. And of course, we've only shown the top 10 here. This list continues on for 749 more occupations. And I want to emphasize that this is empirical data. It's a combination of the National Community Survey, which tells us what people majored in and what jobs they have, and a database of 70 million people where we can see all the degrees they had and what jobs they went into. By contrast, actually, the direct prep crosswalk at National Center for Education Statistics literally has a disclaimer that says this crosswalk is not based on empirical data. So keep that in mind. Be really careful with labor market data. Make sure you know which type of crosswalk has been used, or you may have a significant underestimate of the jobs available and the different occupations available to your graduates. The other thing I will tell you is watch your widgets. A number of schools have put widgets on their websites that show students what jobs they can get after graduation in a given program. That works really well for nursing, but pretty much everything else is subject to this problem. And if you've got one of those widgets and it's telling people there are only 5 jobs they can go into, it's a real problem. You may be driving people away from programs that they're interested in. So September, largest job postings volume. So what's big in September at the certificate and associate level? Well, we've got retail sales. By the way, that is the largest employment category in the United States. So it's not surprising it has very high job volume. Then we have registered nursing. One of the things I noticed on here is that's the only healthcare job here. I was very surprised by that. Normally, again, I'd expect that to be right, to have 3 or 5 of the top slots, but not this month. We have general and operations managers, customer service, admin assistants, except legal, teachers, computer user support specialists, first line production, nursing assistants. Oh, I was wrong. There are 2 healthcare entries here, and then reps, wholesale, and manufacturing. So in this case, what we see is business really dominates our list in terms of highest job posting volumes, with 6 of our top 10 in business, 2 entries from healthcare, and 1 from other and 1 from career and technical education. So now let's take a look at what's been growing fastest in terms of job postings at the certificate and associate level. No surprise to see software developers here, although really recently it's been a little bit of a tough market for them as Google and others have laid people off. I suspect what we're starting to see is a rebound in interest in software developers coming from, first of all, a lot of people outside of the tech industry, but second, around AI and software application development incorporating AI. Then we have technical writers, rad techs, registered nurses and nursing assistants, all the healthcare space, payroll clerks, automotive service techs, teacher assistants, computer and information systems managers, and accountants and auditors, all with growth well over 100. And our top 2 here had more than 600 incremental job postings last month.
Bob, can I grab you for a question for a moment? Yeah. Can you talk a little bit more about what you mean by widget?
That's a great question. A widget, in general, is a small mini application on your that's used on a website to perform some specific function. In this case, the widget is something a student can click on when they're exploring a program, and the widget will tell them what jobs are available for that program. Now, that's obviously important because if it misinforms them about the jobs, especially if it underestimates the jobs, you're actually telling the student that there are not very many job opportunities for that program, and you may also be misinforming them about the wages they're likely to earn if they go through that program. So check those. Make sure if you've got them on your website that you actually go in and see what jobs they say are available to those graduates. And if you'd like and to cross-check, give us a ring. We can tell you what we have in our database for those, or at least, they're usually hundreds. So at a minimum, we give you a count of all the occupations that are available for that particular program. But if you go in and see it's 5 occupations, I can tell you that is factually incorrect. If it's 5 to 10, you're just not seeing all the opportunity that's really available to those grads. By the way, this is particularly an issue in the liberal arts because those programs are pegged to, like psychology, 4 or 5 things for which you're directly prepared. And I'm a history major, and it drives me crazy. It says I can be a school teacher, a museum guide, a tour guide, and a couple of other things that are honestly kind of ridiculous. And when I look at what history majors really do, the #1 career is law. And 15% of history majors become lawyers. And, a great many others become general managers, they become CEOs, and so forth. So very misleading. And if you look at another liberal arts major, philosophy, what you find is something very interesting. One of the top 10 jobs for philosophy majors is actually coding, very well paid. So what you'll hear sort of anecdotally is, oh, philosophy is a dead end. There's nothing you can do with that. That's actually not true. And there are many jobs you can get coming out of philosophy. And some of them are in very high growth spaces. So you might well ask yourself, well, how the devil does philosophy lead to a job in coding? And it's a good question. When I first thought about it, I had no idea. But when you get into it and say, well, wait, it teaches you logic, formal logic. And formal logic is anything but logical, in my opinion. I've tried to understand it. It's beyond me. It's extremely difficult and rigorous, but it is the way a computer thinks. So in that sense, it's very good training for computer science. And you see Google explicitly hiring philosophy graduates as a result. So I'd be careful with those widgets, and also careful with what people tell you about what job opportunities are. If they haven't got empirical data, they probably don't know what they're talking about. So let's take a look at what skills are growing now. Here's something that's not surprising. AI is #1. And I'm going to put my little plug in for AI. One of the great things about AI is it's one of the first technologies to come out where there's a real opportunity for non-technical people to engage with, earn a living at, and build things using AI. So what do I mean? A person who has reasonable command of the English language can write prompts for AI and get it to do some amazing things. And I use it all the time. At this point, I have to write some focus group moderator guides for focus groups coming up in a few weeks. Now, I could sit down and try and write those from scratch. I realized this morning that's silly. What I need to do is go in and describe the focus group objectives to, I prefer Gemini, and have Gemini draft a focus group moderator's guide for me. That will take me between 1 and 2 minutes. And when I'm done, in my experience, what I should have is something that's 80 to 90% ready to go. And then I'll spend 20 minutes on it, cleaning it up, adjusting it, and it'll be done in half or less the time it would have taken me to do it, which is a good thing because I have a half a dozen of them to write. So I could, and that prompt, by the way, will probably work very well for the others that I have to do with minor adjustments. So it'll be even faster for the second, third, fourth, fifth, focus group that I have to run than it was for the first. So AI is everywhere. It is not like coding where it's deep, difficult for non-techies to use. Much of it is very accessible. Now, there are layers and layers to this. So once you go past that simple prompt engineering, you might have to know some Python. You've got to be able to do some data engineering and so forth. But I think a well-designed program, you can layer those things around a core that is pretty accessible and teach people the tools that they need to develop more and more sophisticated AI apps as they go. Smoking cessation as a program, teaching people how to learn about that or teach it is very popular, evergreen, I suspect. Life support, automation in general. Also, this is an interesting, AI is going to be automating a variety of things. Now, this is linked probably more to the factory floor, but for, if you will, the soft factory, the one we all have running on our desktop with email and so forth, you're going to see increasing numbers of automations taking place there using AI bots to get things done for you. Then you can see LinkedIn, upselling, project management, early childhood education, behavioral health, and business development as our fastest growing skills in September. Now let's do a hard pivot away from market demand and look at some information we have on benchmarking. That is, what should the revenue and cost and margin be for a given academic program or course? And some very interesting things in here. First, let's start with why you care. Well, it's helpful to be able to compare your efficiency to peers. Why is that helpful? Every so often, somebody's really found a breakthrough. And until you understand how big that breakthrough is, it's very difficult to re-engineer your processes in a way that can achieve those levels of performance. So there's an exercise we can't do over webinar, but it starts off with a group of people trying to pass a ball from one to another. But the people are organized randomly, but they have to pass it in a specific order. And you say, okay, how fast can you do this? Well, pretty quickly they figure out it's a lot faster if they line up in the correct order and pass it from one to another. And then they start to feel pretty good about how fast they're doing it until somebody tells them that the benchmark for it isn't a few seconds, that the benchmark is actually less than a second to get that ball from the first person and to touch each person's hand along the way. And I won't tell you how you do that, but I will tell you, if you tell a group that it's possible to do it in less than a second, they will figure it out. If you don't, they'll think they're doing pretty well when it takes them 3 to 5 seconds to get that exercise done. I don't want to spoil the exercise for you if you ever run into it. It's really fun to do, but you can find these opportunities for breakthroughs when you understand how good the best really are. First things first, what are we going to look at here? We are focusing our benchmarking on direct variable economics. That is, what does it actually cost to teach a course? And then we roll that cost up to programs or departments. And there are two ways to improve unit cost. So what do I mean by unit cost? In higher ed, we think of unit cost as the cost to deliver one student credit hour. That is, one student in a class that, for 1 credit hour. And typically a class is going to be 3 credit hours. You can have 25 students in it. So it's going to have a total of 75 student credit hours, for example. There are two ways to reduce that cost. One is to take the cost itself down, to reduce the cost to the instructor. And many of you have seen this over time with the introduction of adjuncts. There is another way to reduce unit cost, though, and that is to increase the number of student credit hours taught in that same course. In other words, increase the number of students in the course. And so we're going to talk through how those two things play out. A lot of folks focus up here. We've got to cut the cost of our faculty. It is not enough for focus down here, which is how do we increase the number of student credit hours taught in each course. So as we look at cost, we find it in 3 big, this is our cost benchmarking and the actual types of institutions in here. So we have about 11% of our sample are public 2 years. We're actively interested in increasing that sample. So if you all are interested in doing program economics, we are all ears. And once you're in, you will have access to benchmark data for your programs. Now, keep in mind that the cost of teaching those introductory courses in a different kind of institution is still a valid benchmark, though the 300 and 400 level courses would not be. So that 32% of privates and 57% of publics may still have valuable information for you, although it's not directly comparable. What did we find when we looked at the data now that we have it over several years? We started out over here with approximately 4.5 million student credit hours. And as you all know, the number of students has been dropping. And so that's declined now, and we're down closer to 4 million student credit hours. Over that same period, cost per student credit hour crept up. So many of you have reduced cost, but the cost in our benchmark database did not come down fast enough to offset the decline in student credit hours. So our unit cost, if you will, to produce a credit hour has increased by about 10%. When we look at cost, though, we get a different story. So first of all, the overall cost in our exemplar, now we're going to shift here to talk about an exemplar institution. They did manage to reduce their total cost by almost 10%. But they did something else that's really important. They started off with 67% of their cost being full-time cost, and at the end, they'd driven that up 4 percentage points. Their adjunct costs went up as well by 3%, like 7% over the time period. So that's very healthy growth. in the percentage of their instructional cost that was associated with teaching their instructional salary and benefits. And what we see declining is non-instructional costs. This is faculty time spent doing something besides teaching. It's often called release time. But what you'll find when you look at the numbers in depth is that when you take out the time spent teaching, there are two blocks of time spent left. One is release time, and that's for things like being, participating in a committee or being a dean. And then there's another block of time. And nobody knows what that time is. It is literally undetermined. And in most colleges, that undetermined block of time runs into the millions of dollars. So keep that in mind. You can go in and squeeze some cost out here without taking it out of the classroom. In fact, you refocus that cost back into the classroom and take it out of non-instructional costs, in particular, that portion of non-instructional cost that is not elsewhere classified, i.e. unknown what's happening with that time. Now we're going to get to some real humdinger charts, and I'll take a moment and walk you through them. They're a little intense, so as I say, I'll take a moment and walk you through them and then explain what the implications are. So first, down here on the horizontal or x-axis, towards the left, that is a decrease in total instructional cost. So the amount I spent on instruction went down if I'm on the left-hand side of this chart. If I'm on the right-hand side, the total amount I spent on instruction went up, in some cases quite substantially. Now, once you'd assume that when I reduced my cost, that my cost per student credit hour went down. And that's what you see here. If you're in the bottom half of this chart, below the zero line, your cost per student credit hour decreased. If you're above the line, your cost per student credit hour increased. What's interesting to note is that for the people who cut their instructional costs, most of them ended up with higher cost per student credit hour than they started with. And I can hear you thinking, well, how is that possible? You reduced the total amount you spend, but your cost per student credit hour went up. The answer is in that divisor, the bottom of the equation there. The number of student credit hours I delivered went down faster than my cost declined. So my cost per student credit hour went up. Be really careful with that, because that means if you want to offer discounts, if you want to think about whether you can run more students through your school at a given cost, the answer is it got more expensive, not less expensive, to teach classes, which is really a problem. So what that means, I think, is that you can't really fix your economics if you don't grow. If you're not growing, or at least zero in terms of growth, what will happen is whatever cost you take out will be offset by a decline in students, and your unit cost position will continue to deteriorate. Now, on the right-hand side of the chart, we can see that some of the folks who increased their cost did experience rising cost per student credit hour as well. We've got a handful of people down here where they increased their cost and actually managed to get a decline in cost per student credit hour. What that means is they grew enrollment faster than cost. And as we look at this overall for our database, what we see is that it's very difficult to keep the decline in student credit hours produced ahead of the number of sections taught. And if you don't, then you got fewer students per section. And in our exemplar, you can see they really widened that gap out. They decreased the number of sections taught, and they significantly increased the number of credit hours produced per section, 149%. So very big progress in reducing their cost per student credit hour. And another way to look at this is simply to cut it by course and find your expensive ones. Now, recognize that some things are just plain expensive. If you want to teach theater, it is the most expensive thing in our data set. So it won't be surprising if your theater courses, in this case, we're looking at theater arts, upper grade level. Undergraduate, upper level. So that's 300 and 400. These are very expensive. But when you look at this particular institution, the black line, it's well above the 75th percentile cost per student credit hour. So yes, the program itself is expensive. That 75th is up over $600 an hour. But this particular institution is way above that, over $800 per student credit hour. Not to mention the median here, which is more like $500 per student credit hour, and the 25th percentile is all the way down around 200. So within that theater course, you can see there's extremely wide variability in what it costs to teach that particular course. And here on religious studies, we can see it's actually pretty low cost in our benchmark, but for some reason, this institution is much, much higher with a cost per student credit hour of almost $600 per credit hour, when the mean is down under $200 per student credit hour. So I find these charts quite helpful in being able to quickly identify which course subjects at what level are running over benchmark so that you can go in and figure out what's wrong and fix it. I would almost guarantee that this substantial overrun is because that particular religious study course has very few students in it. To get to this level, you're going to have to run more students through. You can't reduce faculty pay by 600%. What would that be? By 2/3 in most cases in order to adjust that, but you can increase the number of students per class. So actions to take to improve cost per student credit hour, look at your course scheduling. And what that usually means is you got to put the courses into the time slots where the folks who like to take those courses are able to. So for example, if you have a course like business where there might be a substantial number of adult online learners, you want to make sure you have sections running in the evening. Conversely, if you have a course that those students like, you probably don't want to run it at 2 o'clock in the afternoon because they're all going to be at work. Second thing you can do is increase full-time teaching loads, get people back into the classrooms. Here's something to keep in mind. The least expensive instructor in your institution is not an adjunct. It is a full-time instructor who you're already paying and going to continue paying, who's not working a full teaching load, because their marginal cost to teach a class is zero. You're going to pay them anyway. Then we can, obviously reduce faculty headcounts and increase the mix of lower cost sections. I would say the biggest action in addition to this is growth. Go out and do the work to increase the number of students enrolled in your program, and student credit hour costs go down. It's simple arithmetic. Now let me take you to a little more complicated arithmetic. So on this particular chart, we're looking at change in cost per student credit hour. And unusually here, we're looking for more things on the left. That is where the cost per student credit hour went down. The difference here is how much that cost was higher or lower than our 75th percentile in our sample. So, and we're looking at our exemplar institution here. What we can see is that they actually got almost, well, probably 2/3 of their programs down below the 75th percentile cost. So they're doing a nice job of running programs below the benchmark cost in our database. The other thing that's really interesting, though, is they managed to reduce the cost per student credit hour for most of their programs. You see that almost all here to the left of zero. So their cost per student credit hour came down. A few of them as much as $250 per student credit hour. They do have some that went up and increased that were above the 75th percentile and still increased. That's what they're going to be working on next year, I'm guessing. And some where they remain well above the 75th percentile, even though they reduced the cost of this program, it's still well above benchmark and something that they would need to attend to. But you can see the progress that they've made over time in bringing their cost per student credit hour down and bringing it well below that 75th percentile line. Now, all of this has been about places to reduce cost. One of the other things you can get out of benchmarking is the areas where you're under-resourced. And they're often fairly present, and the real issue is that they're often in the hottest programs. So if you look down here at neuroscience, our cost per student credit hour here is very low. The benchmark is quite a lot higher. And I would guess that they are having trouble finding neuroscience instructors and that these numbers are not sustainable. We actually need to add instruction into those programs to get them back up more towards the median. So keep that in mind. Benchmarks are not just about reducing cost. They're also about looking at all your courses and programs and making sure that your cost is aligned with what's needed in order to teach those effectively. In other words, identifying your under-resourced programs as much as your over-resourced programs. And finally, I want to make an important point here for those of you who are facing these across-the-board cuts, where people come in and say we should cut everything that's less than fewer students enrolled. So this is cost per student credit hour on the x-axis. And over here is contribution per student credit hour. So anything above 0 has a positive contribution to the institution's overall financials. And what we can see is almost all the programs in this institution contribute over $200 per student credit hour to overhead, to paying the bills. What's also interesting is these small dots. So that small dot's a very small program, but it's actually highly contribution positive, $400 per student credit hour. This tiny dot contributes $500 per student credit hour. These two are contribution positive, albeit under 200. In fact, we only have 3 or 4 programs in this entire institution where the contribution per credit hour is negative. Now, it is true that all the contribution negative programs are very small, they're these tiny dots. But what's not true is that all small programs lose money. It's not approximately true. Most small programs here are contribution positive. So be very careful. If you're getting ready to do cuts, you have to do the numbers and make sure that you're not going to cut something where the cost you reduce is offset by the revenue you lose. And that is all too common. When I read about these across-the-board cuts at West Virginia and places like that, my guess is that they're going to be worse off in 2 years financially than they are now, because what they've cut, they didn't do the numbers, and what they're going to cut is going to hit their revenue, and whatever benefit they get from faculty cost reductions is going to be more than offset by the decline in revenue. So, in my opinion, happy to run the numbers, but importantly for you all, make sure you run them before you make the cuts, not after. So let me summarize. In September, Google searches for academic programs rose 56%. Very promising sign for upcoming enrollment. Business admin and management up 500,000 searches. Average cost per click only up slightly, so we're seeing stable cost of customer acquisition in that particular channel. New student enrollment in certificate programs is up 5%, and associate enrollment's up 3%. Welding and cybersecurity had the highest annual growth since 2018-19. Very substantial growth in those CTE programs. Psych went up, psych graduates are going to 759 occupations, not the 5 that are directly related to their major. There's growing demand for skills in AI and automation. Not surprising in AI, a little surprising in automation that that's growing right now. I wasn't aware of that coming into this. And last but not least, benchmarking your course cost, revenue, and margin against peers can be very helpful to you in improving the financial sustainability of your organization. So please feel free to join and work with us on economics, and we can get you into our benchmarking database, and you can see how you do relative to your peers. Thank you all very much. Appreciate your joining us this month, and look forward to speaking to you again in a month.
We just put up a quick poll. It'd be very helpful if you let us know how you enjoyed the presentation today.
And I'm happy to take any questions, by the way, at this point. So. For those of you still out there, one of the things I would encourage you, as I'm out at a lot of conferences, if you happen to see me out there, please stop by. It's really nice to put a face to the names that we see every month. Remember, you may be able to see me, but I can't see you. So please do come introduce yourself. I'd love to meet you and hear a little bit about your institutions.
Okay, thank you very much, and we hope to see you on our next webinar.